Hello everybody and welcome back. Well, 2022 has been really talked about so much from inflation, recession, and of course, the Nasdaq. And it's really all about the technology stocks and the decline that they're in. Little wonder when you think about ratios of the Nasdaq versus the SP 500. But have we just hit a critical point that's been respected throughout the last 2 decades? And does this mean that there's a little bit of relief for the Nasdaq just around the corner? Let's take a look at the charts right now, including stocks, cryptos, and commodities. So much to discuss. See you soon. Well, welcome back everybody to the channel. We talk about stocks, cryptos, and commodities here daily. This is for the market recap show for the close 25th of May 2022. And I think the best place for us to start is the FOMC Minutes. Of course, that was what the last day was really about. Risks to inflation were skewed to the upside with a 50 basis point increase likely appropriate in the next couple of meetings. So maybe not as fast as some people thought the Fed was going to go. And I think the big thing is, and they've always been saying this, the economic outlook was highly uncertain and that policy decisions should be data dependent. And then they say a restrictive stance of policy may well become appropriate. It's interesting to see that they're really just going, okay, well, maybe we need to pump the brakes here a little bit, potentially in the future. We'll see how it all plays out. The words for the day in the meeting report, the word risk appeared 31 times and the word inflation appeared 66 times. So really it was just risk, 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 inflation, 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 chuck some words in between. We've done a great job. And that is no new thing to any retail trader, to anyone that's been following the markets in 2022. The whole year, all we've been talking about is risk and inflation. It's part of the reason why we are where we are in the markets. So let's look at some data that's coming out. Well, of course, through to mid-May, Nasdaq short interest was up 16.4% this year to yet another record. Now, I've always said this thing about shorts. When there's a lot of net shorts in and we're hitting key levels, that could be the time where, of course, the two emotions of the market, fear and greed, play out. Right now, everyone's very, very fearful. Rightfully so, very scary in the economy. But are we at a point, negative 30% on the Nasdaq and almost negative 20% plus on the S&P at one point there, of fear? And it's what we've been arguing now for 2 weeks. Remember, there's so much to go through in today's video to really show you a case for why it might be around to turn. Check out that net shorts so high. In fact, they're higher than 2008 and they're certainly higher than they were in 2020. So it's surprising how many people, or maybe not surprising, how many people have shorts in this market. For the returns this year, of course, it really is no surprise that value's been doing the best. It tends to do well in high inflation environments. And you can see here, Russell 1000, Russell 2000 value in comparison to the S&P, this is taken a few weeks ago, basically completely outstripping things like growth. But is it time for the Nasdaq and growth to have a little bit of respite? They're down very hard. 30%, as we mentioned. Is it time for them to start to turn around? Well, there are some arguments to say so. And one of the things is, of course, what we've been talking about. I won't mention this too much because it's in every video for the last couple of days. And that's been the amount of weeks down. This is the first time since 2001 we've seen over 7 weeks down in terms of market action. And that's rare, very rare. And usually, if you notice, the returns 1 month after and 3 months after can be positive. Now, that doesn't mean that we're necessarily going into a positive run that doesn't have another dip in it, but it does tell you that we're hitting a maximum fear level. And you can tell that by any index you look at. Extreme fear here on the index 14, very, very, very big. And in general, the last session, if we refresh this here, you'll notice it was mostly green. So what that meant was the market was recovering. Now the futures opened down. We're going to look at the S&P 500 together a little bit later to really show that opening session was fantastic. In the private community, I did a great video on it and I talked about the key level, the structure, why we were thinking a bit more positive towards the day. But in general, it was a pretty good day across the board. Most things recovered and did well. Let's have a look at the session. So what happened was it was down a little bit more pre-market. It then rallied, it dumped. We can see what happened with the meeting minutes. A little bit of a sell-off, freaking everybody else out, and then a nice rally into the end of the day. Russell ended up 1.8%. So as we suspected, the Russell's been quite strong recently. And then the Nasdaq came along for the ride as well with a nice 1.48%. Thank goodness it did. Let's move over to the sectors, which were doing the best. Some of the most hated sectors were actually up a lot. XRT here up 6.88%. And we also saw some of the other sectors such as XLY, semiconductors, energy, tan, they were all doing relatively well. All the defensives more to the bottom of the session. So it was a risk on style of day. The VIX, the volatility index, dropped again, 28.38. I'd probably expect this to potentially drop even further. We'll look at the key market levels in just a few moments so that we can figure out what's going on with the VIX, but it's stuck in really no man's land at this stage. PCC dropped. This is interesting, showing us a decent amount of calls have been opened over the last 24 hours in comparison to puts. It's all been about the puts recently and all been about shorting. But all of a sudden, it moved towards the call skew. Dr. Copper, that is the health of the economy. A lot of people look at this to see whether the economy is really failing or not. Still holding up in terms of demand. We're still holding that 4 level. Do look at copper. It's important when we're in such economic real turmoil, and it's really important we look at the chart like that. And then we've got the US 10-year. Again, the 10-year dropped from this point. We've certainly been on top of this as a community here. We thought that this would be a peak here for the US 10-year for a while, and it certainly has been, and that's dropped, forcing things like treasury yields and bonds to become an asset that people are interested in all of a sudden. You can see here the TLT really moving up, and that's directly correlated to that 10-year as well. Dollar index, what's going on there? Well, the US dollar has been pretty weak. Again, we cautioned as a community against this rally. I had a suspicion, I think we all did, that this was going to be false. Why? Because everyone suddenly loved Forex. Everyone was trading and talking about currency all of a sudden, and it was hitting a massive critical level. If you ever zoom out on a chart, remember, always draw up your critical supply resistance levels and demand levels, support levels, because you can see it just kind of spikes through this zone, and then it creates a false high and drops back down. Let's talk about the next couple of hours, though, into the next couple of days. So at the moment, it's making a series of lower peaks and lower troughs. So it's doing a pretty good action there. Now, I do think that it probably looks to turn around here. It just breached past this last lower peak, and it does look like the DXY might want to have a little bit of a rally. Now, I wouldn't be surprised at all. We've talked a lot about 103 being a key level. I would kind of like to see the DXY do this and then go down. And it makes sense. You know, we've had a huge level of sell-off recently. It's probably due to do a little bit of a turnaround. It's almost oversold on a lot of metrics. Let's move over to gold. That really did well in the last 24 hours. We had this level really marked up in the last video. Go check it out, and also subscribe if you like the content we're producing. And then this level got hit, and of course we saw that bounce. Now, it's to be expected. It's what we call a bit of a defended zone. Effectively through here, a lot of orders sit, and in general, once you bust into a zone like this, you do see a recovery. I wouldn't be too surprised if the DXY keeps going up, that we do see a turnaround in gold though, and we're still targeting the opportunity, maybe even a little bit lower back into these zones down here. So we'll watch this, and it'll be an evolving situation. But at the moment, gold holding a very good zone. Anyone that was watching the trade yesterday, that was a fantastic level for you to be targeting in, that 1841, 42. We certainly have been on top of that. Now, gold has done a few other good things, and it does tend to do well when the US 10-year comes down as well. I'll give you a bit of a hint there. It's broken the downward trend. So any of the trends that people had drawn through these, that's got broken through. That's good news. It's had a nice ramp off a super demand zone, which we talked about. And at this stage, pullbacks, you would think, be met by buyer demand. It seems to have changed the trend on something like the daily. You expect it to pull back. First buy has been respected so far. If it comes back a little bit further, back into this zone, I'd expect some kind of bullish movement. And hopefully that will correlate with that DXY as well. Let's move over to oil. Nothingness. As we thought, oil is flat as a tack. It's basically long leg doji, long leg doji, long leg doji, indecision or equilibrium, as people call it. And that just means there's a lot of orders there and nothing much is going on. The market's found its fair value for now. We have the resistance. If you breach past that, then you could be going on a bit of a day trade run. That's around that 116 kind of 40-50 zone. And natural gas is kind of similar. It's hit the peak and it's sold off. Both of these I'm not positive on. I know the price action looks okay towards the positive side, but these natural gas and oil, there are more powerful forces at play than just the TA at this point. And that's what I'm just letting you guys know. I'm not liking them. I'm bringing on the charts because a lot of people are trading them right now. I'm neutral to possibly even bearish on them for a multitude of different reasons. Let's move over to the stocks now and talk about Tesla. Well, Tesla finally rallied and it actually closed the gap there in the close. So it hit a very important zone, the 2-hour 20 moving average. Now, we've hit this a lot on the way down and kept making a series of lower highs. Can we finally change trend on the 1-2 hour time frame? So we've got here a trough, lower peak, lower trough. Can we breach? If we breach, we probably expect a little bit of a pullback and then a movement forward. And that would be fantastic. You know, we've finally put in something that can make some sense before around Tesla actually showing a bottom. Hasn't done it yet, hasn't even tried to breach that 680, but I think day traders will be looking for that, looking for the pullback at that point, and then trying to take it long. It has made a new low. This could be max pain. And if we see the right sequence of events and we see things like the Nasdaq and SPY continue to kind of bull up there, I do think Tesla can turn around. Let's have a look on the daily. I've been pretty negative on this stock recently, but we did mention yesterday, big demand zone, big demand zone. If it gets underneath here again, well, look at this. I mean, I think we're going to 550 land. So hopefully that doesn't happen for a lot of Tesla traders. And it's been quite a few weeks now of fairly aggressive shorting. Like if you load this up and we think about it, it's been pretty much horrific now for this many weeks. And we've gone with not much of a rally from the top here. We'll go from this level, about 42% down. So it's no joke how much people are down. I know people are suffering from this order, but it's just the risks that you take when you buy a PS ratio styled stock with, you know, yes, some earnings, but still very high valuations because it's in that growth phase. Let's move over to Apple, another stock that howled, but didn't really do too much. It made a new low the other day. It's rallied up. On some time frames, it's split across this, so it does look overall positive, and I would like to see it breach through here and then ultimately, of course, take out this supply over here. Apple looking better than it has done so in a few sessions, and this is probably the best we've seen it for a little while. So hopefully Apple can continue. I think day traders will be looking just for new breaches, 141, and then of course that 143.28, they'll be trying to take it to that 149. There could be some opportunities here on the chart. Well, let's talk about ratios. And as we mentioned at the start of the video, QQQ, that is the Nasdaq versus the SP 500. It's always the battle. And if you've been taking it since really the bottom of 2003, this ratio, I mean, what's it shown you? It's all been about technology. And I don't think that comes as any surprise to most of you out there. We all know this. But the ratio actually hit highs, obviously different time, different valuations, different companies, but it hit the same highs we really reached back in 2000 and 2001. And this caused, of course, a monstrous sell-off in the QQQ, that is the Nasdaq. But I'm more focused on this, which is the trend line. This is a logarithmic chart, by the way, but you'll notice it kind of has come down to that key level. Is it time for the QQQ to switch, that is, actually show some strength? It's been horribly weak. All of 2022, this ratio has really just dropped and actually started dropping in November of last year. It's down 15% in comparison to the SPY. That's pretty brutal when you're talking about that. So one of the indicators that I always like to use, which allows you to kind of figure out whether there's some risk on or risk off, is XLY versus XLP. Now, I know it's not the sector of technology, but what it shows you is the American consumer. And you'll notice that we hit here a fair bit of support as a ratio. It's been very bad. The tech has been shocking this year. I mean, this whole time, the indicator, other than just here, has really told you, don't get into risk. Risk is terrifying. Are we about to double bottom on this? That is actually create a low for some relative outperformance from the Nasdaq. Ooh, it's getting damn close. I mean, this is exactly where you hope the market turns around, and it did have a good day. So the more days it follows on, if we breach through this ratio, all of a sudden we could be seeing a bit of risk on the markets. So what do you guys think in the comments down below? Is the Nasdaq just going all the way down and there's no saving it? Or is it time for a bit of relief on the market that has been belted the most in 2022? What do you guys think? Let me know in the comments down below. Let's move over here to the Dow. Nice movements here on the Dow. Continues to make a series of higher lows, that is higher troughs and higher peaks. Strong sequencing, really strong movement here from the Dow. It's actually been one of the better trades over the last week, and I don't often say that about the Dow, but it certainly has. And you can see that the next level it's kind of going towards, that 32 kind of 66, maybe even the 666, the devil number here. And this zone is I think where you could possibly be seeing that Dow targeting over the next couple of sessions. At this stage, it looks relatively strong, this chart. It's recovering. And of course, if we breach through all of this, well, that shows you in many ways that we do have a little bit of recovery, and the next zone becomes over here. So that's what we're hoping for in this market. We do need a relief rally. Let's have a look at the DAX now, the German 30, showing us the world market. Well, it's doing battle with the trend line. And you can see again, wicks and purchasing has generally been okay here in this market. It's finding a little bit of weakness right now. I've got a horizontal resistance up here around that 14,245. That hasn't changed. We did see some nice wicking. I would like to see some strength in the next session from the DAX. If we get that, I think that we can move towards breaching this level. And at that point, you know, it again is kind of showing us some synergies with rally on. Large volume coming through, or at least decent volume coming through again, decent purchasing, and we'll have to see whether it can hold up. IWM, one of our favorite little markets at the moment. This is the Russell 2000. We've seen really some synergies here with pullback. So we had the pullback over here. We obviously took that distance from the non-false break, so this area here, and it gave us the bottom, which just so happened to be this level, 2018, 2020, the peaks. Then we move over here, and we've got the zone, and we see that pull up. And of course, this is the 190 area, which makes sense for anybody that trades role reversal or even trades supply demand. You've got a decent amount of supply in here. You've obviously got previous demand. You've got support equals resistance, a big key level at 190. So there could be some relief to come here in IWM, and another promising sign coming off 2 weeks here in the last couple of sessions. It looks okay. And that's why the bears are having a hard time. Like if the bears want to get control, well, firstly, I think a lot of bears will be looking at this zone. I think they'll be like, yes, I'm going to get you there. But if it does break underneath these wicks, you know, then we've got problems. Then we've got a real discussion to be had about this bear side. Let's move over to the Nasdaq, because frankly, it's been disappointing. Very disappointing. It's closed the gap again that it made here. We've still got a clean gap that we need to clean over here, and we have a clear resistance. And I think anybody knows this 12,000 level is a big fight zone. And this is really where I think a lot of market, I guess, action is going to happen. Because if we get a close above this, bears are trying to short it. They are just saying, no, 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 you're not getting through there, guys. We're not letting you get above that area. And that's at the 12,000 kind of 50. If we do breach it, we close above the next level, you would think fairly significant zone, 12,534, fill the gap, and then potentially allow those bears back in to do the shorts. I wouldn't be surprised if bears don't try to attack that level. But what do you guys think? This is a zone. We can clearly see there's shorting potential here over the next 24 hours. But if we get through, there could be some good times ahead. S&P 500, again at resistance. That's why we're bringing up this video right now. There are some cases here in the major markets to say that we're at resistance, but decent session for it. Let's have a look at the daily here in terms of the close, so we can see how it closed. Bullish movement, nice close, comes back, sweeps. So that's the first sweep. The second, that's the max pain that we've been talking about. This is the sweep for liquidity. And now we're putting the pressure on. Do we move back up to this level similar to the Nasdaq? I think it seems pretty possible. We're on the fourth touch now of the downward trend, and you guys can see how much at stake here. This is a big deal. Like, you know, we breach this, all of a sudden we go up here. I would say something like this occurs, potential sell-off, and then there's even that chance for the rally to 4,300. And there's a lot of reasons why, whether you're an Elliott wave person, whether you're just somebody that believes in legs and believes in, you know, the movements of the market. If you think about it, and we go back over to this original move, so let's grab this original move from there to there, and then you take the distance from this point, so that is the point, you know, not without the false rally, you kind of get to an area where it's hit. So you get to this zone. You can also use the theory of the amount of waves that's gone in. 1, 2, 3, 4, 5. A, B, C. 1, 2, 3, 4, 5. No break below. A, B, do we have a C? So these are the things that people are looking at. And there's so many different technical reasons why this could be the base. And I hope it is, because it makes sense. It makes sense to rallies. It makes sense to the current market conditions. And I'm not saying, again, that it's not a bear rally. It could be. And there are some key levels. I mean, that 4,300 just underneath that, and of course this 4080. All of those will be key, plus this trend line that we've got today to try to snap that off and give us a clearer picture. Now I want to go through quickly the session. So you can see the session opens here where the big volume comes in, but the market comes down to a very important zone, 39.20. It's been a big level just in general over the last couple of sessions, and 39.20 is a huge zone, and we see basically the market coming in and making a series of new troughs, that is finding some kind of pain. Now, if something happens here, this is a 1 minute chart, you can see some wick purchasing, and it goes on to make a new peak. Now, when it does that, it kind of changes the trend, and it comes back down, which is very normal after that, and then it starts ramping. So I can certainly see why the market liked that. But usually when this occurs, just so you know, the market will generally come back and try to grab a little bit later on. And you can see there's the grab during the news. See how it grabbed that zone? Now, if you want to know more about that, of course, you can join our private community. You can do some of our courses and stuff. But this is quite common, where it comes back and it grabs it during the news. So see that news spike? Yeah, that is normal. That's an algorithm having a crack at the level, and it's for them to get back in. So if you ever wondered what happens during news, this is often the area. And if you're not prepared for it, you get broken even a lot in that trade, because a lot of people would have break evens sitting underneath these swings. They get clipped, and then it moves against them. It's what makes day trading and scalping so difficult. So it can be tough. Max Pain 398 for the Friday. So that's actually gone up a little bit. It's gone up 3. So we'll see whether that can keep going up. Ideally it would. And we would go a little bit higher here so that we can really expect that market to go towards these options expirations. And we'll have a look at Bitcoin. Look, nothing much to report here on the crypto market. It's just stuck. We were a little bit more positive on Bitcoin yesterday due to this low. And I still maintain we've got a huge support through here, a big resistance through here, and everything in here is just really more day trading within the larger range. We breached 32, things are looking much better. But up until that point, it's really just a sideways market for now. If you haven't already, come follow us at FX Evolution on Twitter. Great place to come and have a chat. And of course, our Discord community where we're really live. Amazing amount of community members sharing trades daily, sharing amazing economic stuff. Thanks very much. And some of the memes that you see here on the channel. So make sure you join the public one. If you want to join the private one, you can do so. And prelim GDP is the big bit of news. 8:30 New York time, prelim GDP. All right, let's see what happens there. Probably not good. And then core PCE price index, 8:30 a.m. Friday. So these are the two big bits of news leading forward. And hopefully we can see a little bit of market turnaround, 7 weeks down. I just want to let that sink in. I've never seen it before in my trading career. One of you may have. It's been a long time. So yeah, it's always exciting when you're part of history. And sometimes in the last couple of years, we've been part of a lot of history. Make sure to subscribe, smash that like button, everybody. We'll see you in the next one. And thanks so much for taking us over 90K. I really appreciate it. Bye for now.